Systems. I cannot emphasize the importance of systems enough. Our group has worked on Chase for a number of years, and we've walked a path with Chase as such. We did get to a few stumbling blocks where we weren't happy with what they were delivering, but we've really been able to iron out all of those. And we're very, very comfortable and happy with what Chase delivers for us and the process that it instills, not only from a finance perspective, but actually across the group of companies. We work on Chase being our operational system, and then Navision, which is integrated with Chase. It's a Microsoft accounting system, being our financial reporting system. I'm going to start off with Chase. So Chase should be used by basically everyone in the organization. And if they aren't using it, they should have access to it, because Chase gives a lot of information that is critical to everyone in their different roles to make sure that everyone is understanding how we use money, where we use money, what is loaded on accounts, should things be loaded on specific jobs, should they be moved to other jobs, how we are logging our time, and ultimately we're a business that sells time, and Chase is the portal to capture all of that time. So I'd like to start off by speaking you through the process of Chase and how ultimately something gets into Navision and allows us to report on it. So we have a new client. We load that client on Chase and we are briefed on a job. We open a job bag, and attached to that job bag we will have a number of CEs, which are cost estimates. This process will be run either by the suit or by production, depending on the nature of the job. The suit, in this instance, if it's a retainer, for example, will create CEs. They will stipulate what we are selling. A CE ultimately becomes an invoice. So they will say that we are selling a number of hours, this is the rate per hour, and it will give you a number. That number should be linked to the client contract that we've got in place. And it's really critical, further to that we do have signed client contracts on file, so that we always have that to refer to. If there's ever any disputes, you can go back to the client contract, which is linked to the cost estimates. And obviously from an audit perspective, the auditors always want to see signed client contracts. So the suit will raise a CE, and they will take that CE to client for approval. The approval from the client is obviously them acknowledging the debt from their side and saying, I'm across this, I accept the hours, I accept the rate, I accept the cost, and I'm happy with it. They might either sign it or they will give a purchase order from their side, depending on what their system is. One or the other is what we require. We cannot invoice without some form of commitment from the client that they acknowledge the invoice and that we can go ahead accordingly. So in the instance that they sign the invoice or they give a purchase order, what the suit will then do is that they will process a billing instruction. So they will say this cost estimate is in a position that it can now be invoiced, and that billing instruction will come through to my debtors person who is responsible for invoicing. She will receive a billing instruction, and like I said in the debtors section, she will receive it, she will interrogate the billing instruction and the cost estimate to make sure that the margin is correct, it's in line with what the client's expectation is. If there's a purchase order, then she loads the purchase order onto the system, and then she raises the invoice. Very important on that billing instruction, for if it's not normal standard payment terms in line with their contract, that needs to be stipulated on the billing instruction so that finance knows that they need to change the standard payment terms on Chase. We have been working very closely with Chase to ensure that the platform that is Chase is able to allow us to input all necessary client information. So as we receive a client and as we complete the contract, what we are able to do is, if it's a retainer client, we are able to actually put all of the staff on the back end of Chase, the cost of that staff, the hours that the client is expecting to have the deliverables of each of those staff members, so that it is actually able to feed Chase on a monthly basis, the invoicing side. And when you are inputting your timesheets, it's able to almost give you a tracker of this is what the client's expecting, these are the hours to date, and give you little reds or greens saying this person is over their hours, this person is under their hours. And where we are trying to go as a group is providing these monthly recons to clients, because I think in this industry it can be normal practice to just rack up the hours, and at the end of the year you say, oh my goodness, we delivered far more hours than the client actually paid us for. But by that stage it's far too late to actually go back to the client. So we have been working on reports that allow us to set up the client deliverables in terms of the engagement, and hopefully with a signed contract say this is what the client's expecting, this is what we've committed to, and then every single month actually be able to reconcile that and give it back to the client and say, we're good here, or I'm raising a flag, we've actually over-delivered hours here, or we've under-delivered, and it allows just communication with the client so that at no stage do you come and give them a bill of 500 additional hours or whatever the case might be because you're needing your books to balance. So back to the invoicing side. The debtors person will receive the billing instruction. They will raise an invoice based on that. That invoice will then be sent to the client. Now, depending on what the job is, if it is just a retainer job bag, then you will just be raising retainer invoices on a monthly basis. If it is a production job bag, that is quite different, and I'd like to speak you through that. So the client briefs us on a TV commercial. The suit will work with the producer and their team to establish the cost of this job, what our margin should be, how much of that is stuff that we will deliver internally from an hours and a resource base, and what we actually have capacity to deliver within our group of companies, and what we need to outsource. We will then get quotes from third-party suppliers, and depending on the nature of the relationship with the client, either mark it up or go in flat, depending what has been agreed with the client. We will then create a cost estimate, and there might be a number of different cost estimates on a specific job, given the different elements of the job. But in this instance, I'm just going to say that there's one cost estimate. So there will be one cost estimate raised to the client, and it will be for the production of a big TV commercial. This will include internal hours, deliverables that might be more than just hours in terms of the M&C Saatchi Group and what we are able to deliver, and then there will be a cost coming from a third-party supplier, from directors, treatments, whatever the case might be. Depending on what the contract says with the client, we might be able to mark that up. Alternatively, we go in flat. That's totally dependent on what has been agreed with the client. We then get that approved internally. We check the margin. We make sure the margin is in line with what is acceptable and what has been agreed. And then it gets sent off to the client to get approval, either by means of a purchase order or a signed CE. On receipt of that back from the client, a billing instruction will then go through to the finance department for them to invoice accordingly. So now, in Chase, you've got a job bag that's open, you've got a cost estimate that's been raised, and you've got hours that have been loaded as an estimate. So saying, Mr. Client, you have bought 500 hours from us in this instance. Now we need to be able to, number one, deliver those hours, and number two, track those hours correctly. So on Chase, when we had done those 500 hours, we would have broken down how those 500 hours are made up, whether it is creative, suiting, strategy, production, traffic, whatever the case might be. We then will have hard costs on that job, i.e. third-party suppliers that will deliver things that we don't have the capacity to deliver within our group of companies. So what we will then do is once we have received approval from clients, we will then give approval to the third-party suppliers for them to be able to go ahead with their work, and we will issue them a purchase order for that. Once they receive the purchase order, they are free to go and deliver what they need to deliver as per their brief. What we will then do is, if you go onto Chase at any time, you are able to go onto this job, and on the job itself, it's a very, very useful tool that I use daily. I go onto something called a job recon statement. And what that job recon statement gives you is a full breakdown of that entire job. It gives you the analysis of the costs. It gives you what the estimated margin that you were due to receive is. And it tracks where we are from an hours perspective, from a margin perspective, as well as from a cost perspective. Because what's really critical is you might have issued a number of purchase orders to third-party suppliers, but only have received 5 of the 10 invoices for some reason back. And so it allows it's a tracking tool for our creditors team to make sure that all purchase orders that have been issued, if indeed they have been issued and are valid, that we are getting the tax invoice in a timely manner so that we can reconcile our creditors. Because the difference between the purchase order that we have issued and the creditors invoice that we have received is something called WIP, and that is critical in this world, and we are going to be getting to WIP on point 6. So that is Chase, and Chase is an extremely, extremely useful tool, and in my view, absolutely critical to take away from the risk of doing things manually, from taking away from manual CEs where Excel doesn't do what it should have done, there's a typing error, there's a formula error, and it just adds a lot of credibility into the process. And what it does is really defines the jobs instead of allowing humans to define the process, because that's always where there can be there's big room for error. So from Chase to NavVision. Now NavVision is our accounting reporting system. And what's really great about Chase and Nav is that they integrate, they're alive with each other, which means that anything that happens in Chase that affects the financials is immediately available in NavVision, and vice versa. For example, if my team load a new supplier on NavVision, it immediately pushes through to Chase, which is really useful because there are a number of systems that speak to each other once a day or once a week, etc. And the fact that this is live and interacts immediately with each other makes a report, from a reporting perspective, it's really, really great. It's not a SAP. I'm sure most of you would have heard about a SAP, nor is it a pastel. We used to be on pastel until about 3 years ago, where we realized that the number of transactions that we were actually transacting through our individual companies was breaking pastel, and that there were a number of bugs in terms of our reporting and our debtors age analyses, etc., every single month. So we don't have that anymore with Nav. We've got a lot of capacity to grow onto it and with it, and the great thing is that you also are able to tailor reports. So I have got a number of different managing directors in our group of companies, and each of them looks at finances with a different lens and wants to see things from a different perspective. And what I'm able to do now on NavVision is be able to actually tailor a dashboard for the individual managing directors to allow them to see what they want as regularly as they want. So they don't have to go into some daunting financial system that they feel like they need to learn a different language to understand. They really can just log into their own dashboard and they can see top 10 debtors that are overdue, or creditors that haven't been paid in time, or an analysis of their profitability, or clients that they're making most money on, or the clients that they are losing money on, their cash balances, the various things that they deem to be really, really important. So NavVision is Microsoft based, and what it does is it allows you to import bank statements immediately and then really just match bank statements instead of actually going line by line by line. It allows for very, very seamless intergroup transactions. So we have got obviously 7 different operating entities, which means 7 different companies, and it really is very seamless when it comes to transacting between the different groups because they are different entities. It's also really great in terms of being able to search for functionality. Because it is a Microsoft-based product, you can use the Control F to search for transactions. It will pull out transactions, it will give you lead times, it will give you historical information, which is also really useful. So ultimately, NavVision gives you a very powerful reporting tool. It is easy to use. It is easy for people who aren't used to that kind of system to search for information. Your data's aging is useful. It's helpful. You're able to read it. A layman, for all purposes, can read it. You're also, with a click of a button, able to export things into Excel very simply. Creditors age analysis, you have got all of your creditors' details loaded on the system. You can change from creditors that you haven't used. So if you say, I haven't used this creditor for 6 months, you can make them inactive, and then there's just lots of different dimensions which some of the smaller accounting systems don't allow for, and so we find it really, really great and a really powerful tool.